the household to have a financial freedom conversation don't start with go to school, get a good grades, and make sure you get a good job with benefits, right? They may stress going to school, getting good grades, getting a good degree, right? Starting your own business. And oh, by the way, mom and dad started with an insurance policy when they were kids. It's not even a thing of like, you got to learn about insurance. I just had one, right? And then all of a sudden now, as a kid, as a 22-year-old, 24-year-old striking out on your own, what do you mean? I got an account with $100,000 already in it, $250,000 already in it. That's a different conversation.
Welcome to Filling in the Gap, a conversation that we create to educate, empower, and inspire you to take control of your life. Boldly take steps to improve it so that you can start living the life you've always dreamed. Today, we have with us Mente Lawson, a financial specialist and entrepreneur who is here to help us increase our financial confidence so that we can start winning at this money game. So Mente, thank you for joining me today. Financial education is so important, right? It allows us to make informed decisions with our financial resources so that we can make progress and get ahead. So tell us how you went from being a successful, award-winning chef to becoming an accomplished financial advisor.
Well, first of all, thank you so much, Tiki. I really appreciate that great introduction and just being allowed to be on the show and talk to you for a moment. But so my transition really kind of came in two parts. And so to tell you kind of how I went from being a chef who's winning awards and in the grind every day to now also looking to help serve families, not just my meals, but talk to them about financial solutions. It really started from my upbringing. That's how I became a chef originally, as I grew up in a big family, 20 aunts and uncles on my mom's side alone. So I was always around food, right? So even something like Thanksgiving, I didn't know it was a big holiday because of the size of my family. That was just a Tuesday to us. Right? But in many households, sometimes some households face financial hardships. Mine came very early on. My father, who was in construction and ran a company, got sick. And when he got sick, he went on disability and never could work again. And so my mother had to shoulder the work, the bulk of the workload there. And the finances. And so things changed, and I saw her working 3 or 4 jobs. And I won't go into all the different jobs she did, but I just knew, being the oldest of my brothers, that I felt I had to help. And one of the jobs I started working at was a restaurant. She was a server there. She got me a job. Coupled with that, an opportunity that I first qualified to go to a trip in school to France. So when I go to that, I qualified. It was supposed to be a 2-week trip. Ended up being a 2-year stay. And so that's sort of how the chef side was born. I fell in love with French culture, the French cuisine, became classically trained. And then I moved back to the States and moved on. Oui, on pour. Don't press it. That's funny. I should be much better with that side. But that happened, going through some things like that. And then what happens is, over the course of time, I go through a situation where I'm an entrepreneur, like my dad was, right? Running the business. 2008, I had some personal setbacks in that time frame, where I ended up, having made some money and doing well in the industry, but also losing a little bit. I lost a restaurant, a food truck business. I lost a home in the process. So a lot of things happened in 2008. Built myself back up. So many Americans face that. Yeah. At that time, I ended up working for a lot of bigger companies. So in some ways, it was a blessing, because I went from working for myself to working in some big companies, big systems, and access to some different types of folks, celebrities, and what have you. But I'm going to kind of pass over that for now and just tell you that around 2019, the company that I'm with, I'm the corporate chef of that restaurant group, and we serve about 5 different states. And I was overseeing multiple restaurants at that point in time. And I had anywhere from 500 plus employees, give or take, at any given time, that were under my supervision. But my company suffered a setback. They restructured. The 2 partners at the top, they split up. I was on track to become a partner in the company at that time. And so it set me back. But in addition to that set me back, I also found that we were pregnant with our first child.
Oh, wow.
So I had a lot of motivation, shall we say, to really look at my finances and things that were going on at the time. And so an individual reached out to me and was going through my chef page. We were having a conversation on Instagram and offered me an opportunity where he said, hey, would you be open to making some additional money part-time in this thing called financial services? I wasn't really familiar with it. I've had my head down and just been in the kitchen grinding for the last 20 years, I know. And at the same time, I was very familiar with profit and loss, P&Ls. I was the guy you go to if you wanted your restaurant to be profitable and run smooth. And I'd also gone through issues in '08. And so I figured, hey, what the heck? I'll learn a little bit more about money and finance. Maybe let's see what this has to offer. So I check it out. And the gentleman that I would meet would end up becoming my mentor. And so without really dragging out too much more, what I'll tell you is this. When I met him within 15 minutes, he showed me some concepts around money and finance that blew my mind. And also around mentorship and leadership. He showed me what he could offer from a standpoint of mentorship. Now, to keep this in mind, I had spent the last 20 years always kind of seeking a mentor in business, because I'm what you call a business-minded chef, and didn't really find one. So I kind of created my own, I mentored myself. And one thing I realized, and this may resonate with some people, maybe not all, but sometimes when you work for someone else, it's in their self-interest not to show you everything that they know.
Sure.
Right? Because if you ever leave, you become competition. And so I realized I kept hitting my head against that type of situation. Now I'm in a situation where there's literally no threat. We work hand in glove. It's like a partnership.
Who are you talking about?
Great, I'm glad you asked that. So I'm with a company called PHP, People Helping People. And so we're a financial marketing organization.
Okay.
And so what we do, we focus on financial education. We market on behalf of companies you may have heard of, companies like AIG or an Allianz or a Lincoln Financial or John Hancock, right? These are some big Fortune 500 companies that you heard of. But right now in our industry, these companies, as big as they are, they're struggling and they're shrinking.
Okay.
And the reason why is because the average agent that represents my industry is a much older Caucasian male, 61-year-old to be exact. And so there's nothing wrong with being in your 60s, right? Or being even a Caucasian male. The challenge is that most people, when it comes to being a consumer, tend to buy from people who look like them, talk like them, or act like them, people they can relate to. Well, so then I could ask you then, if that's the case, who is the 61-year-old most likely relating to?
People who are either his age or in his demographic in some way.
Exactly. So guess what? Who's getting left out?
The people who are not in his demographic.
Women, 100%, right? And whether you're African American, Latino, or an Asian, or if you're millennial or Gen Z.
Sure.
So here at PHP, we're in a unique position because we can attract people from all walks of life.
Right. Yeah, isn't that the point of business, to kind of hone into or focus in on the areas that in the market that are not saturated or that are underserved, to find a solution to
100%. It's funny you said that. That is actually the name of my burgeoning agency that I'm looking to operate. We're headquartered here in the East Coast out of the Annapolis sort of Baltimore region. I'm looking to start the first office for us in Delaware, as a matter of fact. And my office, my brand is called STEP, Solutions to Everyday Problems. So it's funny you said solutions, because that's going to be the name of our agency as we move out here to Delaware.
Absolutely. So, so statistically, 90% of our population is not developed in the area of financial literacy.
Sure.
Would you say that your company is capable of helping them to improve their financial literacy? And
absolutely.
how would you do that?
That's a great question. I'm glad you asked that. You know, it kind of starts here, right? We mentioned that we can appeal to a diverse audience that looks like America, that is America, right? And whether it's the fact that our CEO himself is actually not from this country, he's an immigrant. He's Iranian, so he's a Syrian and Armenian. That gives him a very diverse background. And he's only in his 40s, right? He came here as a teenager. So that kind of gives a picture of who he is. And our executive team consists of Nigerian Americans, Latino Americans from Salvador, Honduras, Mexico, even Filipino Americans on our team. Now, here's what we do. We offer to solve three problems that are facing our industry right now. The first is distribution. Those companies, right? I mentioned before, the AIGs, the Alliances, those companies, right? They don't care about where you come from, what you look like, what language you speak. What they care about is distribution of financial services products, right? So we're able to solve that because as African-American male in my 40s, I have access to a market that may be a challenge for that 61-year-old agent to get to, right? So that's problem one. Problem two, financial literacy. More to your point, right? We don't learn how money works in America.
Right.
Unless you come from a family that maybe could teach you about money. I mean, or if you were, come from means. Say, for example, when you look at our schooling system, right? Whether it's high school or in college, do you recall it or think if they teach us about financial freedom or how to generate or how to become generationally wealthy?
Absolutely not. I can tell you right now, my daughter went to school to major in finance. And pretty much anything she knows about her credit score, saving money, investing money, she's learned from us.
Exactly.
And that's a shame because she spent a lot of money to not learn the important aspects of finance.
When it comes to personal finance, what we find is people tend to find out through the school of hard knocks.
Yeah.
Going through any issues in their 20s and 30s, hopefully getting back on track in your 40s and 50s to be ready in time for retirement in your 60s. That's horrible wisdom, but it's mostly what we know. Here's what we do at PHP, right? We teach around many of the concepts that are part of the bedrock of the home, right? So you're going to learn about inflation and taxation, how to reduce your taxes and things like that. But in addition to that, we teach concepts around, well, what's a 401k and how does it exactly work? Mm-hmm. What's infinite banking or a rich man's Roth? And here's one for you, Tiki. There's something called tax code 7702, right? How is it that many Americans, the wealthy Americans in particular, are leveraging that for a tax-free retirement, right? The top CEOs in America, many of them use this particular tax code for their retirement. Wow. They offer the same employees that work for them something called a 401k, but that's also tax deferred, meaning there's some things around taxes there that you're going to put off towards the future. My question then would be, when we talk to many of our clients, is do you think taxes are going up or going down in the future?
Going up, for sure.
Okay, great. So if you're putting your money into a tax deferred plan that's offered through many of our employers here in the US, right? If we just said taxes are going up and you're putting in a tax deferred plan, what's going to happen later in life when you go to retrieve that money?
It's not going to have the same value.
You're going to pay more in taxes. Mm-hmm. Who's that ultimately benefiting? You, who worked all these years to only have to pay more taxes later in life when you probably have the home paid off, no kids living at home to help you write off taxes. You're going to be paying a lot more in taxation. Who's that helping? You or the government?
Right.
We show Americans, everyday families, right, middle class in particular, how they can really learn the rules of the money game and apply it in their lives and allow them to keep more money in their house and use it in the ways they wish to use it, right? And we teach those concepts here to our agents on a weekly basis and to our community, right? And that's free. We don't charge for these kind of conversations.
And how are you teaching? Is it like going online? Is there like courses online, or is it directly through you personally in like a Zoom meeting, conference room?
Yeah, so what we actually do, we believe in, if you probably remember this, maybe back in the day, I remember this, my grandmother, there used to be an agent that used to walk to everyone's home and collect, and this kind of thing. And so we believe in that person-to-person aspect. Now, this is a pandemic world that we're living in, a reality now, right? So Zoom has definitely become a form in which we use a lot. To be honest with you, I haven't actually seen any class in person since the pandemic broke out last March, right? That being said, there are people now as states are opening back up that we are having in-home meetings. So we have what we call a kitchen table presentation. So we like to sit down and talk to people. Now, if it's in your home, great, one-on-one. If not, we do a Zoom environment where we often discuss the 3 ways money grows, right? Or the 5 rooms of money. We also, for our agents and many of us that are affiliated with the company, we do weekly trainings, right? So there's a couple times a week where, as an agent, I'm able to sit down and be trained by leaders in the industry. As a matter of fact, I had an informal mentorship call this morning with a mentor. He's in Chicago. He was just out this weekend. He and his wife are making around $2 million cash flow due to this industry. Cash flow. Their organization is worth almost 50 million, right? Right. But cash flow, they're bringing in 2 million.
Well, I think when you do like door to door and you do go and sit down with people at their table, it's more personable rather than just something online. Although I know that's becoming more popular, I'm wondering if you guys would consider doing something like that, like an online training.
We actually do provide opportunities for larger classroom styles. Actually, on Tuesday evenings, we do an opportunity where you can learn about the 3 ways that money grows. You can also see exactly how we are able to help families and how our agents get paid in the process. And again, on Thursday evenings and select different times, our leader here, my personal mentor, Chris Hart, who lives here in the Annapolis area. He moved from California originally, moved out here. He and his wife, they're at a place now at 34 years old where he just crossed over making $500,000 these last 12 months. Right?
Wow.
That's the type of money that's being generated. But what he does is he trains us on a weekly basis. I'm one of the what they call certified field trainers within the agency. So I went to an academy that he provides. Now, a lot of the things I'm telling you, those are for people who become agents and become part of the team. For the public, though, the Tuesday night at 7 p.m. or Saturday mornings at 11, those are available to the public, as well as on Thursdays at 6 p.m. That's available to the public. And if someone was interested in finding out more about it, I'm accessible, obviously, through social media platforms. My social media account on IG and on Facebook is Mente the Mentor. And on LinkedIn, it's just Mente Lawson.
Okay. Well, we make a lot of bad decisions with money because we don't really know how to use it. We don't know what to do with it. How does your organization help with that? Help us to understand what to do with money, how to use it.
First thing we want to do is we want to sit down. Like, for example, if I'm talking to you in that kitchen table presentation, one of the things I'm going to first sit down and just kind of talk about is the way that money first works. We got to talk about foundational issues, right, that exist in our understanding of how money works. So I may sit down and explain to you something called fixed, the way that money grows in the first place, fixed, right, variable, and then index. A fixed example is going to be like your banking accounts, your checking, savings, even cash on hand. Now, we'll show you the upside to put your money in a fixed account and the downside. Fixed, for example, your money's safe when it's in the bank, right? You have access to it, it's liquid. However, the downside to put your money there is you're going to experience very low growth, right? Anywhere from, say, 0 to 1%. I mean, what's the bank giving you nowadays in interest rates on your savings? 0.00.
Yeah, right. 0.2, if that.
Right, exactly. So you're going to see very low growth in that situation. Now, when you go over to variable accounts, what we may say, okay, well, what's a variable account? Your stock market, right? That's also where your employer-based plans reside, your 401ks, your 403bs, TSPs if you're in the military. Real estate is a variable, it's tied to a market. Very popular these days, Forex, Bitcoin. These things are part of what we call the market, right? Now, the market, everyone knows the reason why people put their money there is they want to experience a lot of growth. So that's exponential growth potential there, right? So that's the upside. But what's the downside? Just like you experience a lot of growth when the market goes up, what happens when the market crashes?
Very volatile, and yes, you can lose everything.
You can lose a lot, if not all of that money, right? So like you said, very volatile, up and down. Now there's a third way that we also make sure that people know. And then this third way only comes in 2 ways. Doesn't matter where you are in the world, right? Now it comes in either what they call a fixed index annuity or an index universal life. I'll say it again, a fixed index annuity, which is an FIA, and an index universal life, which is an IUL, right? As I'm saying that, most people say, well, that sounds like insurance, because only insurance companies can provide either of these types of vehicles. Because with the insurance company, it's also a safe place to keep your money.
Okay.
At the end of the day, where do banks keep our money? Inside insurance.
Oh.
That's why it's called federally insured.
Oh, wow. Okay.
It's sitting there in plain sight, right?
Yeah.
Right. So that's how they keep our money there, right? It's safe.
That's why they say if everyone went to the bank right now and said, I want to withdraw my money, there's no way the bank could give everyone their money because it's not there physically.
Right. That's true. That's true. Now, here's the thing. They're going to be able to get you your money, right? It's safe. It's backed up to $250,000, right? They got you covered that far in insurance, right? Okay, great. Now, those companies I mentioned before, as big as they are, as much as they've been around, you also have a contract in place. So that's a binding agreement. You got to be taken care of. You sign a contract with these companies. Cool. Now, that being said, that's all the pluses. What's the downside of keeping your money in an indexed account, right? Well, that money can only grow anywhere from 0 to say 9% in interest, right? Now, 9% is pretty good if you're going against the fixed accounts in the banks, because we just said a bank's not giving you anywhere close to 9%. You're lucky you can get 1%, right? But the stock market could give you a lot more growth than 9%. So you have to accept there are limits. There's a cap to what you can get when you put your money in this safe place with the insurance companies. However, that 0 represents a floor. So imagine this, and imagine an account with a disposition to never lose money. What these insurance companies are saying is you put your money in this index account, that money can participate in the upside of the market, right? And what they're actually doing is drawing from something called the index of the stock market, right? So you probably understand it better because an index, we all hear S&P 500. The S&P 500 is an index of the stock market. So the Nikes, the Googles, the Teslas, the Facebook, right? Those companies are part of the strongest part of the American economy.
Okay.
So when they do well, your money can do well, right? Up to a certain point, a cap. But let's say that part of the market doesn't do so well and crashes like it did back in 08. You're protected at a floor of 0.
Okay.
Meaning you lose no money guaranteed. Not a dollar, not a dime.
Oh, wow. And that's through the insurance tools that you.
That is correct. That's the index form of growing your money.
Okay.
So go ahead.
No, go ahead.
No, so what I was going to say is obviously, and if I was doing this in person, I was showing you a graph of how when the market does well, your account goes up. But if the market should crash, your account remains flat. Right? There's no growth. We call
you
that.
Put in whatever you've invested, the what did you call it? Bottom 0.
Yeah.
That is
floor 0.
Floor 0. That basically means that what you invested is still there. The only thing you may have lost is what you gained.
You will not have lost any gains. Here's the great thing. It's called principal protection, right? So, and that's great. My next point I kind of transition to is showing you that as the market goes up, you lock in your gains.
Okay.
When the market crashes, you wait there. When the market recovers and goes up, you just gain again.
And right? How do you lock in your gains? Is there something that you have to do?
When you put your money here, that entire process of using index is called principal protection.
Okay.
There's a gentleman by the name of Warren Buffett. Many people who are interested in money and finance have probably heard of Warren Buffett. He's a financial guru, wrote a lot of books on money and finance, that kind of stuff. He has 2 rules when it comes to money. Rule number 1, never lose money. Guess what rule number 2 is?
Number 2.
Never forget rule number 1. He keeps it simple. He keeps it simple. But here's the thing, Tiki. Many of our friends, families, and associates are constantly losing money, right? And primarily for this reason. We tend to trust the system.
Right.
Let me give you an example. Like, now, having spoken to you before, I kind of already know a little bit, but I'm just going to ask you anyway, right? Do you like money?
I love money.
I'm going to say that, right? Okay, so here's the thing now. I'm going to show you a figure right now. We're going to discuss a little bit of money here for a second. So let's say today I was to give you $100.
Mm-hmm.
Okay, now that $100 that you're going to be given today, that's principal. You're going to have to also put that money into the stock market today.
Okay.
Now you got $100. Let's say the stock market crashes 50% as soon as you put that money in there.
Right.
Okay. All right. I know you weren't planning on doing math today, but let's just say the market crashes 50%. How much do you have left?
$50.
$50. Excellent. Correct answer. Okay. Now, let's say the next day, the market does a full recovery, back up 50%. How much are you at now with your money?
100, and is that $100?
That's what most people say. Actually, $75.
Okay.
Because your principal came down to 50, right? So let's review it. Your principal came down to $50 because of the initial drop in the market, right? And then it went back up 50%, but 50% of 50 is only 25.
Got it.
So now you've added $25 to your 50%, $50 of principal, you're at $75.
Yes.
The way we operate oftentimes is we hear that the market went up and the market went down, and we think we're good, but you have to do twice as much work to get back to what you lost.
Right.
Because you're losing principal, right? Now, let's say that same $100 was given to you, right? And you put it inside the index account. What happens when the market crashes then?
You lose nothing, according to what you said.
So would you rather be the person who lost nothing, had your principal protected and have $100, or would you rather be the person that, hey, the market went down, you came back up, you're at 75?
Right. I definitely would want to be the person who loses nothing. So let me ask this question. A lot of times we are not educated, but we're also afraid of, we don't have that confidence, to take the type of risks that are required to invest. Because we do hear the stories of how volatile a market has been, people losing money, the 2008 crash, people have lost, hundreds of thousands of dollars. And so it is something that causes people trepidation, where they don't either get the education that they need so that they can make wise investments. Because one of the rules of money, I'm sure, is to not invest in what you don't understand.
And that's why education is so key, right? And what we do. And so the reason why, one, I like this kind of platform is, you have an opportunity to speak to more people, because there are people who are looking for this information, even like myself, back when I came across this industry. And so what we do is we say, first of all, everybody knows a family member or someone else, right? So in my case, I'm going to speak to people that I know. What happens then is we all know friends and families and associates. For instance, for you, scores of people, right, that I don't know. But by this conversation, I have an opportunity to maybe be introduced to one or two of them, right? They get to hear this information. Now, they may be willing to sit down. And that's how we work. We work grassroots up, right? Being able to talk to people in the community who look, talk, and act like us. That's what we believe is word of mouth. So we're not necessarily trying to put it on the side of a billboard and say, here, call this number, right? And we're not just saying, hey, here's an ad that we're going to just post in the local paper on social media. We're going to have a conversation and educate people to people, because at the end of the day, our name is People Helping People.
Yes, and I love that. And word of mouth is one of the number one ways to grow a business. It's still like one of the number one ways to grow a business.
And that's why what we do, being involved in the industry, financial services, and being in insurance, people at the end of the day, we relate to other people. That's our human nature, right? And that's why word of mouth referrals are so strong. And that's why we believe so strongly in it. So we're not a type group that's going to go and cold call a list. You're not going to see us email spamming you. You're not going to see us doing a lot of different things that are prevalent in our industry. We also find this. You mentioned earlier about market saturation. You're a businesswoman, you understand that. Anytime you want to start a business, sometimes you have to also look and see well, how many other people are doing this? And, is this going to be advantageous for me? If I'm going to open a restaurant as a chef, right, and I'm going to look at this block that maybe I want to be on, am I going to open a crab restaurant in Baltimore, right, when everybody does crab? I don't know. You have to decide what works for you. So in our case, everyone that's living at some point is going to pass away.
Right.
That's just fact, right? So everyone needs some type of coverage in their life, some type of family protection. And based on their particular financial situation, they may be looking to pass on some type of legacy. We're able to provide a solution for that scenario that everyone needs. Guess what? There are very few agents out here doing this type of noble work. So for me, as far as just a move on, where do you go to create income? Where do you go to create residual and passive income? This is a very fruitful industry. First,
Right.
it's the second highest paying industry behind professional athletes, right? And then the way the structure is set up, it becomes a great way to build generational wealth.
So how is it different than any insurance, like any other insurance policy that we are most familiar with?
Sure. And we educate on that. So for instance, if you were to look at maybe what people think about is kind of the old type of life insurance, right? Where you get a certain amount, you give over, let's just say 20, 50, whatever amount that you're paying, that you're putting into your policy every month, right? Something happens to you, that there's a death benefit paid out to your family, right? That's traditional. You're putting money into something and you're not necessarily getting anything during your lifetime, but you're leaving it behind so your family doesn't have to do a GoFundMe or plate drive or whatever that is, but it's money that's left to your heirs. Got it? That's traditional life insurance. Why we see a lot of people sometimes in certain communities, mine in particular, that don't always see the benefit of it until what? It's too late, until they're now sick and are looking for it, right? What we show is, first of all, there's term policies, and that exists for a reason and is good. It tends to be more affordable, and you get a lot of coverage. There's certain scenarios it works in. What we also show is there's permanent type of life insurance policy. But here's what I'll ask you first. What kind of phone do you have, Tiki, by the way?
An iPhone, of course.
iPhone, great. I knew there's a reason why I like you. Team iPhone. There you go. All right, cool. Now, I'm pretty sure everybody understands. That's even why I asked you that. Android, iPhone, Google, everybody has their own phone. We're always at war back and forth, all that kind of stuff like that. But they're constantly coming out with new features on the phones, whether it's thinner, whether it's more powerful, longer battery life, more cameras. Why do they ultimately do that? Why is Apple and Android, Google, why are they doing that?
They're trying to meet the needs of their market.
That's right. And what are the ultimate outcome for them? What are they getting for this?
That their demographic, their market would invest in their product.
That's right. So they're going to make more money, right? Okay. Now, let's leave the phone companies out of it for a minute. Let's take car companies, for example. Why is it that Nissan or Mercedes or Audi come out with a new feature? They're out with the 2021. Is anything wrong with the 2020?
No, I guess, to improve, to look like they're improving upon the product.
Yeah, they're for-profit business, right? They want to make more money. So then my question is, if Apple, Google, Android or Samsung, or Mercedes, Lexus, if they want your money, they want our money. Do you think that AIG, MetLife, John Hancock, Lincoln Financial, Forces Financial, do you think they want our money?
Of course.
Guess what? That's right. So guess what they do? They innovate. The new type of life insurance says this. Okay, great, Tiki. You have been responsible. You decided to get $500,000 worth of coverage on yourself so that in the event something happens to you, your family doesn't have to bear the burden while grieving of also raising funds to bury you. Great. However, they innovated. They went a step further. They said, wait a minute. How about this? How about if life happens, you get sick, cancer, heart attack, stroke, or even just out of work for a long period of time due to a car accident, right? What if you had access to that $500,000 while you're living, right? Not just money to go to your family when you pass away, but while you're living, right? That's what they've done. They innovated with something called living benefits. right? That gives you access to that money. Because guess what? Let's say you have a 401k, right? What's the first thing you're going to do when life hits you like that? Here's what happens first. Let's say you don't die, you get sick. Most of the time, people go on disability. Disability is about 60% of their income. Many American families are struggling these days at 100% of their income, paycheck to paycheck. What happens if you're living on 60% of your income, right? You're in trouble. And now you're tempted to go and borrow from that 401k. But what happens when you touch that 401k prematurely? They tax you. They tax you pretty hefty, right? So guess what? That's your retirement account, right? That's your long-term savings plan. Well, you just depleted that long-term savings plan. In many cases, people are going to do what now once you're ready to retire? I got to keep working.
Yeah. And I think we've seen so many of these examples that the younger generation, I would like for you to speak to the millennials because, or those who are younger, because we got the Zs and all that, you know, who are, but I believe that they have a different perspective, and some of that has to do with hearing the stories of their parents or grandparents having struggled with trying to get 401k money out and the losses. I've heard the stories from my father, who actually suffered from cancer many years ago, about 10 years ago, and he had to go into his 401k. And the trouble, for one, to get your own money, but then to be penalized for having to do that while you're sick and struggling for your life. And so these young people, what I'm seeing more of is like my children, they are investing in Bitcoin, they're investing in the market and stock market, and they're also talking about real estate. And those are becoming very popular investments. Oh, Forex is the other one. Right. And I sit back and I bite my nails the whole time because I'm so worried that they are throwing their money into these platforms and they are going to lose. So how can your product benefit a young person? Like, is it better to get in when you're younger? How does that work?
100%. And here's what I'll say. First of all, kudos to your children for already thinking like that. That's an tribute to you as a parent, first of all,
that's
right?
All the kids. It's just something that's trending right now.
Right. Every generation, almost sometimes, I mean, it just may be off top a little bit, kind of course corrects from the previous generation or does something maybe a little bit different, right? That kind of stuff. So what we're seeing now is because of many of these kids, their parents experienced 2008, maybe became a little more thrift conscious, or they were living off of certain means. The children now see the value of saving, putting their money into something, investing. Now, the challenge is sometimes most of us were exposed to column 1, fixed, column 2, variable. So those are the options that we know about, right? And so when that's what you know, that's the field that you play in, right? However, what we're doing now is trying to educate and expose people to this third column called index. Now, when I say most people know that, the wealthy know it. Walt Disney, he built Disney World off of the cash value of his life insurance account, right? Ray Kroc, the guy who created the McDonald's as we know it today, he created the McDonald's we know off the cash value in his life insurance account, right? But most of us don't know that story and understand how true generational wealth is built. For instance, anybody who's putting their money into, let's say, Forex or putting their money into Bitcoin, great places to put your money when you're making money, right? But you do stand a chance to lose that money. In addition to that, once you grow into that money and you go to move it, that's called gains, right? You got to pay more taxes on that money. When people start to understand that there's a way to grow your money tax-free inside a life insurance cash value account, it starts making more sense, right? Or let's say you have a 401k and you take some of that money out. Let's say there's 20K in that account and you take 10K out. First of all, they're going to tax you on that 10K, right? So you're going to keep about half of it. 5K goes over, you keep 5. Took 10 out, you keep 5, right? But what's growing interest for you now? That remaining 10K. If you're looking at a cash value in your life insurance account, you borrow 10K out, you get all 10K tax-free. And the account keeps growing like you never touched 10K because it leverages the value of the life insurance policy. And we can sit
unbelievable.
unbelievable, right?
It really does.
And so it just takes a conversation, and we need more people in this industry, and we need more people who look like us in this industry. And that's the mission that PHP is on, and that's the reason why I'm joining PHP. Because once you say, we do something called the 5 homes of money. What are the 5 best or strongest financial homes for you to grow your wealth, for you to put your money? Once you understand the 3 ways that it grows, where do you put it? Which asset makes the most sense? Is it putting it in the bank, the stock market? Is it putting it into your retirement plan, like your 401k through your job? Is it putting it in real estate, or is it putting it in life insurance, in an index form of life insurance to be exact, right? And each one has its place. What we teach is, if you use life insurance, you can build that so it can fund the others, and you never lose, because again, it's protected. Your principal's protected here, and you can pass on serious wealth no matter what happens in the market. Can't say the same in the other asset class. Nothing against the asset class, because as you build wealth, you want to build and add to your portfolio.
Right.
There's just an order in which you do it. Many communities, right, have figured that out. I think of one community, for example, in the Jewish community. They often take out a life insurance policy on a newborn, right? It's very cheap when you're younger because you're healthier and you're going to tend to live longer. So it's more advantageous for the insurance company to cover you at a younger age. Makes a lot of sense. You get a higher death benefit, you're paying less costs, and your cash is growing for you over a longer period of time. Well, guess what they do? They stop funding the policy as a parent at around age 20. That child walks into adulthood with X amount, maybe $100,000 or more.
Right. So
where else can you do that?
But this type of policy that you're speaking about, well, I mean, because I feel like with the whole life in the term policy, that's pretty much what is the most common you hear about, whole life policy and a term policy. And there's not much cash benefit in any one of those. So how is it that you're able to get such an increased cash benefit in your policies?
Well, just like we talked about the cell phones, they innovate over time, cars innovate over time. These insurance companies have innovated over time as well. If you look back prior to the early 80s, and some of this stuff now, you obviously can research this historical data on it, but prior to the 80s, the stock market, which has always been with us, was not the main driver. But through Wall Street becoming what it became in the 80s and 90s, a lot of people have diverted their attention towards stocks. That's the main way in which they look at things, right? Insurance companies have had to keep up and evolve, right, with time and innovate. So they have new products and new services. Now, how would most people know about it? They're not in the insurance industry. I'm in the industry. Right. So I know which of these tools work best. And again, what's an added benefit is, let's say, for example, again, we're talking about maybe your retirement account, or even you're talking about something like your Bitcoin account. If you got sick, let's say, right, you now have access to money that you wouldn't have access to, tax-free, to pay your bills and pay your debt and give you long-term care if you're putting your family member into a hospice or something like that. It's just such a bigger beneficial tool that you're able to leverage and be used towards generational wealth, being able to preserve wealth that you're growing in other assets, so you don't have to sell property, you don't have to pull out and liquidate your 401ks. It's just such a much better way to utilize resources.
And when you talk about being able to benefit from the growth in that policy, how long are you saying this could take? Something like this could take, where you can see major growth? Oh,
depending on how a person funds it and exactly what their goals they're trying to achieve. Now, here's what I can tell you. I can never exactly say, oh, here's what's going to happen, because no two people are alike, right? You got different genders. You got the fact that this person smoke. You have to throw age into consideration, and everyone has a different set of financial situations, right? And so it goes through a process. I mean, they're going to check things from maybe your background or your driving habits. So there's a lot of other details that go into what the coverage could look like. However, strictly from just looking at the growth, you're looking at anywhere from 0 to 9% that your money can grow in any given year. And you're looking at the fact that, guess what? If there's a year where there's no growth, you didn't lose any money.
Okay.
If there's a year of negative growth, you didn't lose any money. So you're always looking to compound and grow your way.
Yeah, that is amazing. That's fascinating that you don't lose any money. Yeah. So is there anything that you would share that you would like to share with the audience in closing?
Sure. First of all, again, thank you for being a gracious host and allow me on today and kind of interviewing me and allow me to talk a little bit about myself and about the company. And what I'll just say in closing is this. Right now, we live in a turbulent time. We've seen how unpredictable life can be, right? Many of us weren't personally touched by COVID. We know someone who was or is, even to this day, right? And so life can be very finite, right? However, many of us understand, and I think particularly I'm going to speak as a father for a moment, if I may, right? And as a father who's in his 40s, you start realizing that the end is closer than the beginning. You start thinking more about legacy. You start thinking more about your health. One great thing about PHP is that we're a very God-fearing organization without being religious, I guess. At the same time, and we realize that how you do one thing is how you do all things, right? So an organization like this, as much as I talk to you about insurance, it's really crazy. What we do here is we help you develop as a person, right? And to level up as a man or a woman, right? And to be able to walk in your God-given purpose. You'll be challenged by the amount of books you read in a month. We really challenge each other. Matter of fact, we challenge other level. The last time you saw me, I had a full head of hair.
Yes, right? Saw that.
Right? So I lost a bet, right? That's a challenge. And so I had to pay up. And so I had to pay up. So that's the kind of environment where we challenge each other in a good way, in a very healthy way. So imagine being in a place where you get challenged in the amount of books you read, right? The next thing is about the people that you associate with, right? In the meetings that you attend. So for instance, this morning, I'm on a call with about 300 other agents, all being mentored, right? Around growing our business. From a man who's making several million himself, who doesn't have to do it. He doesn't get paid anything for that call that we were all on. It was just part of him giving his level of service, right? And pouring into us. So maybe we can avoid certain things in our business that he had to go through. We can learn from his pain, right? We can learn through his experience, right? And then he can also, because where he's at financially, he can also cast vision, help us grow and help us stretch, right? And then when you're in those meetings that we're in right now, we learn about the financial concepts, right? So in closing, I'm bringing it all together to say, we're an organization that believes in helping people on all levels. Even something as simple as our CEO, Patrick Bet-David, right? I remember last month when I met him, or that was February, and I met him in person. He spoke about challenging people on their fitness level, right? And he didn't call anyone's name out, but he just dared us to go 30 days without sugar, without bread, and different things, to see how it will change you in your business by just being a little healthier, having a little more energy, right? You might make one more phone call. You might be able to stay on an hour later or have a little more drive, a little more focus, right? This is the type of CEO that we're around.
Yeah, it sounds like you guys have created a great community experience and environment. If someone wanted to join you guys in the entrepreneurship part of it, what would they have to do?
Yeah, so there's a couple of things. It does require a license. So in this industry, it does require, and depends on your listeners, what state they're in right now. That can vary. So generally, I say anywhere from like $100 to $200. It could, and there's some states that are cheaper. I can think of one state in maybe Virginia and a few others that are less than $30. to get licensed in that state. So I always like to just round high, right, and be conservative. So around 100, 200 bucks, right? And then if someone wanted to get started with us, that's also the licensing is in the future. That's once you get studied and are ready to take your license, right?
Okay.
And because we want you to get
Do
to
you guys
study.
provide that?
We do. We send you, there's an online platforms you're able to use. It goes through the modules of training. We also offer through, and it's interesting, my mentor, who's the senior vice president in the company, Chris Hart, he actually has his own licensing coordinator that he pays a salary to, so that all the agents for free can be taught by her a couple times a week.
Cool.
And so you get connected with one-on-one licensing coordinator in our company. Again, you're not paying for it, but he's looking at it from how can I add value as well? How can I be a service to others? So that's the first step. And it may require a background check in many states, and most times they're going to do a background check. And they're going to look and see if anyone has a felony or misdemeanor, especially dealing with money. Someone has that in their history, it could be a hard time working with us, because at the end of the day, we're working with people's personal information, social security numbers, credit cards, stuff like that, right? Other than that, very simple enrollment process to become an agent with PHP is 199 bucks, right? If someone's interested in doing that, again, they can reach out to me, and depending on where you're at, I can get you connected with the local, what we call marketing director, or even myself here in our team. If you're in the DMV, I'd be happy to run with you and get you started, get you going. That process gets you tied into our corporate office that gives you the infrastructure for being in compliance at all times, licensing, handling payroll. Basically, imagine partnering and attaching yourself to the existing umbrella organization that has all the infrastructure that you need.
Right.
190,
Wow.
right? All the training. And then on a local basis, whether you show up to an office in person or whether you do it on Zoom, in my case, the Senior Vice President, Chris Hart, has a training platform that he's taken the last 7, 8 years of his career and figured out exactly what we need in combination with PHP to help you become a solid agent, transform yourself, your family, and those around you, right? And put you on the path to financial freedom.
Wow. So, or how long does it take to get started before you're actually connecting with people?
Great thing with us, we start your training day one. We don't wait for you to start training. So in our industry, there's 2 ways you can go about it. Most companies, you have to have a license and then they start training you, right? You have a license, then you're out. We see it more like how you have a driver's license. Before you get a driver's license, you probably should practice driving first, right? With someone in the car with you, right? Not by yourself. So I'm a certified trainer. So anyone who's new comes on our team, they pay their $199 enrollment fee, they get started, they're studying their courses, they're understanding what annuities are and life insurance and all the different terms that go with it, and terms and index and all this kind of stuff, right? While they're learning that and they're learning the language of the business, right? They get to sit back and listen to someone like myself go out and conceptually educate our clients on the 3 ways money grows, on the 5 forms of money, right? On the different types of life insurance. So they get to see that. They get to see how to ask a person a question around what their financial goals are and what might be suitable for them in a given set of financial circumstances. So they get training from someone who's been doing it. So they can then therefore be safely conducting their life license, because they have someone's life in their hand, someone's money in their hand, right? So we take that very seriously.
Yeah, absolutely. Well, we have had a wonderful talk. I really appreciate you showing up and doing this. As a group, as a community, we have to increase our financial confidence. We must be committed to gain new skills, to acquire assets, and learn about new skills that are demanded in the market. And I hope that we have been able to inspire you, to up-level you, and up-level your money game in some way. And Mente, you can share with them how they can get in contact with you.
Sure. So again, if you're on a social media platform, you'll be able to go to Facebook, Mente the Mentor, right? Very straightforward, Mente the Mentor. The same on IG, Mente the Mentor. So just shoot me a message, DM me directly. If you're on LinkedIn, the other platform that I'm on, it's just my first name and last name, Mente Lawson. Very straightforward.
Thank you for joining us. Please like and subscribe, and don't forget to hit that notification button. We'll talk to you soon.